Zach, I'll start with you. Record numbers for Singles Day. Alibaba shares are down 2%. Why?
Hey, Morgan, thanks for having me on. I don't know if they're down because of the Singles Day numbers. We think these numbers were pretty robust, actually. I just did the back of the envelope math. I think it's 24% year-over-year growth. That's versus 27% last year for Singles Day. So I think these numbers came into, the mid, maybe high point of the expectations here, Morgan.
Joel, how do you see it? I mean, we are seeing at least slight deceleration of growth versus last year. Is that a reason to be worried, or is the pressure in shares, if that's the reason they're selling right now, overdone?
No, I think the deceleration was expected. Most expectations were around 20 to 22% GMV growth year over year. Yeah, it's below. We saw 27% growth the prior year, 39% the 2017. But it's impressive numbers. I think they exceeded the low bar. And then I think more of the selling pressures due. The Shanghai Composite fell about 180 basis points overnight. More unrest in Hong Kong is probably now murking, potentially throwing some mud into the water for the Hong Kong listing. But overall, I think the numbers are fine. It's just a terrible day, given all the geopolitical tensions that have kind of risen up again over the weekend.
Yeah, Zachary, I mean, given this record, you have to wonder what the number could have been had there not been an ongoing trade war or so much disruption in Hong Kong.
Yeah, definitely. I think this sort of speaks to the testament still, though, of Baba's investments the past couple of years to really capitalize on the growing middle class in China. They've sort of invested to focus on this middle class in case this trade war is continued. And we think they've done a great job at it so far, as you see in these numbers today.
Can we use this as a macro indicator, or is it just too specific? One day, obviously, the benefit of the global awareness, the buildup, or is this really a statement about the consumer?
I don't know if it's a statement about the consumer as much as the strength of Alibaba and the specific technology investments that they've made, the fact that their platform is still growing robustly in China. I think it's more of a testament to how good Baba has really done. And yes, you go back to the analyst day, the consumption growth in China, I think 50% of the retail growth was actually through Alibaba. It's really a testament to Baba, which is becoming a larger portion, along with some of their peers, such as Pinduoduo and others. In China's growing middle class.
Yeah, Joel, just to dig into that a little bit more, I mean, Arjun just mentioned the fact that there's growing competition. I mean, is Baba still the best game in town, at least from an investor standpoint, or are some of these other names worth a look as well?
Yeah, I mean, right now it's still 100% that it's the 800-pound gorilla in the room. And yeah, there's competition from JD.com, Pinduoduo. They're obviously more geared towards the smaller cities in China, which Alibaba's aware of. I think over 70% of new active accounts for Alibaba came from these smaller cities. So that's clearly a focus for them for growth moving forward. But then I think you'll see Alibaba continue to expand outside of China as well into Southeast Asia. They're investing massively into logistics. We knew they unveiled a new kind of cloud operating system to kind of help with all the single days orders as well. So, I mean, they're just a behemoth on so many levels. They're involved in the financial arm as well. So I still think it's the company to beat. And I think if you strip away the trade war and even the recent political unrest in Hong Kong, shares of Alibaba are probably well north of 200. But until then, it probably kind of lingers in a relatively tight range between 175 to 190. And then hopefully kind of the clouds can clear and we can get lift off on the stock.
I know, Zachary, I know you're around 240 on your target. I wonder, I'm thinking back to the IPO day and the few times we've had Jack Ma here on set. The conversation has always turned to their ambitions in North America, the degree to which they would invest here or try to take some business away from domestic companies. How much of that has changed given how different U.S.-China relations are today than they were then?
It's a great point, Carl. I think it has changed. Look, they still have global ambitions. Maybe North America somewhat tempered versus when they first went public, but other parts of the world are still, very much in Alibaba's wheelhouse. And, we think they've positioned themselves well for that, as well as their domestic consumption growing middle class.
Joel, just to, expand on that a little bit, Alibaba reportedly eyeing a $15 billion Hong Kong listing. What does that mean for, I guess, the company's strategy moving forward and how it is thinking about that reach both in China and beyond?
Yeah, I mean, I think they really, it started kind of get in motion earlier this year. It's been talked about prior, obviously, as well. But I think it's a way where they can mitigate the impact of a trade war and kind of, again, help them kind of raise capital in other regions and help kind of boost their infrastructure more locally. But I think it's a move more to kind of mitigate, the negative fallout of a prolonged trade war and kind of how they can tap other kind of markets, capital markets around the globe without, like I said, being negatively impacted by, kind of Trump administration policy. So I think it makes a lot of sense. But, yep.
Go ahead.
No, that's it.
Joel, how are you thinking about U.S. tech stocks versus Chinese more broadly?
Yeah, I mean, it's been an interesting year for tech. Obviously, the semis have, benefit from the pro-cyclical rotation. Stock group kind of bottomed, several quarters ago. And what I'm looking at is still continued outperformance within the semi-equipment space. I think regardless of what you think of where we are in the semi-cycle, with China continuing to invest heavily in their own silicon industry, I think the semi-equipment manufacturers are the arms dealers for the global race for AI and 5G dominance. So we have Applied Materials reporting this week, whether it's ASML on leading edge. That's kind of where I'm looking as far as tech goes, who the name's going to benefit through 2020. And I still see numbers going higher for the semi-equipment group simply because of that. The race between U.S. and China is not going to slow down anytime soon.